Hey everyone, it's Doc with Ready Set Trade. NIO is up 60% over the last 10 trading days. Is this a stock that you should buy or hold off for a little while? Let's take a look. Here's a chart of NIO on the daily time frame. And so you can see that over the last year, really since the beginning of 2020, we had something that was barely moving and then started to move as we got into the summer. Above $8 a share, consolidated around $14 a share, built the next base, which was around $20 a share, and then we've seen it steadily grow higher with less time in each base. Now, what I've got here is I've got a chart which has got volume profile on it, and this is what I find very helpful when we have a chart that goes literally ballistic, almost nearly vertical to the upside. The first thing that I've learned when it comes to parabolic charts like this is don't fall for the FOMO, or fear of missing out. It's a known phenomenon through psychologists that the sitting on the sideline watching something run without you is actually more painful than actually taking a stop loss on a normal trade. This is why people can't control themselves and actually end up just chasing after a market at the very highs, and it has the same effect as a dog chasing after a car down the street. So the first thing I would say is don't do this. Don't feel compelled to chase after something. There's always a better price entry. So now the question is, what is that better price entry? What level should I be waiting for to get in at? And there's really two tools that I use. One of these being volume profile and the other being FIB retracements. And this normally shows me a very accurate way of evaluating where the price could potentially come down to and then find support. Normally when we see something like this happen, we will see what's called a hairy back on the other side of this parabolic run. And it can be very difficult because normally this is from people that chase after this. And so they one by one are weeded out on the way back down, while the patient investor that has a plan can make some plans for accumulating this at a pullback. Now, volume profile is going to show me where these potential landing zones are. And one of these, and the first one of any consequence, is about 28. The next one is down here at about $19 per share. And then we get down to the much larger ones, which are about $13 a share down in this area. Now, what you find through volume profile is that markets, when they push through something like this, there is no support created. So there's no support created on these areas like this. Price does not tend to congregate. If it just cuts up through there, there is no support on the way back down. So if this thing starts to tumble, there will be no support until it hits 28. So really 28 is your first level that you can sell against. And then from there, it's going to be about 19. And then once again at about 13. Now, what is a reasonable pullback? Well, this is where we can use FIB retracements to understand that. So I am going to start this thing from where I believe really the beginning of this trend is, and I'm going to place that somewhere just about north of $5. So that may not be exactly perfect, but it's good enough for us to determine whether or not there's some level of confluence. And so what I'm looking for when I draw FIB retracements like this is I'm looking for the 38.2 retracement, 50%, and then 61.8. And I'm looking for any confluence with some of these volume profile peaks. So the first one that we have is an area between 28 to 30 in this area here. So this will be our first area of value. The second area of value that shows up to me is around this area down here at about 20. So between 19 to 20 and then 28 to 30. Now, how do you take this trade? Do you simply put a limit order out there at $30 per share and wait for the price to come down and fill you? Well, if you only trade stocks, that's pretty much the only way that you have to do this, is to either wait for the price to come down to 30, or if you're more patient, you can wait for the price to come down to 20 if it ever does. But there's another way that I can do this, and this is called the cash secured put option. Cash secured put option. Some people call them naked puts. I don't believe that's an accurate term. I believe that you should have the cash available for assignment. So what we can do here is we can go out to 24 December, which is about 44 calendar days away. And what we can do is we can sell this $30 put. And let's say that we can get about $1.50 for that. So in other words, that's $150 per contract. Now, what that means is that we can collect about $150 of credit. However, we're going to have to put up $3,000. So $30 a share times 100 shares is $3,000 of margin for this. So if the price does come down to that $30 a share by the 24th of December or lower, then we'll be assigned. And basically, then we have the honor of picking up 100 shares per every contract that we sell. But meanwhile, we can get paid for this. This turns out to be a 5% return for sitting on our hands and doing absolutely nothing for the next 44 days. So if you're going to buy NIO and you don't want to buy it up here, which is a bad idea. If you want to wait for that pullback to about $30 a share, you can do that one of two ways. You can put a limit order into your broker and you won't be filled unless the price comes down to exactly $30.0. Or what you can do is you can get paid $150 right now. And regardless of what the price does, you will keep that $150. If the price goes higher from there, wave goodbye at it and say, well, I'm not going to chase this. You keep that $150. If the price goes sideways to 24th of December, you keep the $150, you wave goodbye at it and wait for the next opportunity. And even if the price comes all the way down to $30.50, say for example, you keep that $150, you wave goodbye at it, the option expires. It's only if it comes down to 30 or below there by the 24th of December. So would you want to chase after it up here or wait for it and buy in at about $30 per share? This is a secret that Warren Buffett has been using for decades. It's one of the simplest option trades that are out there. It's basically getting paid to buy NIO through a pullback. And this is what makes the difference between a professional trader versus everybody else, which is chasing NIO up at these levels. What are your plans for NIO? Let me know in the comments below, and we'll see you in the next Market Minute.